Good morning, all. It is Friday the 3rd, and damn, I was this morning had to haul out of my house as fast as I could because I got an alert on my calendar. I'm supposed to meet with my accountant at 8 a.m. So I had to get over there and start having that all worked out. And let me just tell you, this whole tax thing is such an amazing mess. What you got to do just to maintain what you've earned is a really, really tough thing. So yeah, just know that any of the battles you guys face, I get it. I understand it. I feel it. And I'm chasing around like crazy, just trying to keep up with it. And it's just, it's an ass whooper. They make it intentionally tough just so I think you'll just lay down and do whatever you need to pay taxes. I don't know. But, you know, there's a lot of expenses that go into building what I build. And luckily I get that to offset things. So into some of the data that's out there, the jobs report came out, the Bureau of Labor Statistics, and there's an expectation of 550,000 new jobs, right? You know, we've got this administration claiming that they're the greatest job creator in the history of everything. Not necessarily is that what we've got. We've got 210,000 jobs created in the month of November. So we did not quite hit what we were thinking, but there was revisions. When you go back to September and October, there were revisions of about 82,000 in positive revisions. Therefore, taking the sting of this hit today of the complete massive miss on expectations, which does have a negative effect to your equities markets, would typically help bonds. So in our bond world, I would have expected to see some great movement in the mortgage-backed securities to kind of secure where we were yesterday, at least slightly better than our rates yesterday. But that miss did not do what I thought it would have done because of the revisions. The other thing is we've got average hourly earnings are up quite a bit. You know, we've got unemployment rate has improved a bit. Weekly earnings are up. So that right there, unfortunately, is having an impact on what that news is for the bonds thing. That was an unfortunate. No, it's not necessarily as unfortunate, right? I mean, we want jobs to be improving, want that growth, but it does impact those who we're hoping to get a better rate today. Some cases you might see that, some cases you may not. So where are we sitting with the mortgage-backed securities? I'll show the screen that I've been showing last little bit. There's the line I'm worried about. I'm not 100% certain if that's the precise line, but when I run that 101.95, the price, this is in the 2.5 coupon. The reason the 2.5 coupon I'm looking at a lot lately is because of the volatility. If that continues to push lower than these lines, it's going to put pressure on the coupons where we go to for the mortgage-backed securities or the coupons we go to for the funds for the investor loans. If it continues to put pressure on that, then we're going to move into a higher coupon. Therefore, rates are going to continue to jump, right? So this is also a concern to me. We're in this downward trend. You know, we are still above. If you look here, this is the current price, 102.25. So we're above what I think might be the floor of, or that keeps us from really losing a lot of ground. But we're also being pressured that direction. So what I'm telling everybody, I'm going to keep telling you, you know this from me telling you over and over and over again, don't stress about where these rates are. If you're in a range that just makes remote sense, we're in the low 4s right now for real estate investors. I just locked my primary residence at 3.625. If somebody is out there offering you something in those 3s for an investment property, you got to ask the questions. Are they trying to sneak a second home in there on you, right? Is that out there? If you're thinking about, do I do a second home because I can get a better rate? No, don't put yourself in that liable position to where now you put yourself in a spot where you could potentially risk yourself being in a fraud case, right? It's never worth that. 0.25% or 0.5% or whatever. Never put yourself in that position. Do what the deal is, because it doesn't matter what it is. With the rate of inflation we're playing in right now, this is free. This is not just free money. They're paying you to take their money. Let them pay you to take their money, right? Quit worrying about where we're at with the rates so dang much. Get the deals. Find the deals. Lock it up for 30 years. We're not going to have this gift of these rates very long, I don't believe. How long that is, I can't say. 1 year, 2 years, 6 months, I can't say. I have no idea, right? Everything here is madness I've never seen before. So that all being the case, focus on your business, focus on just getting the deals, locking up that long-term leverage. Just know that it's always going to work in your benefit, especially in today's environment. If you have any guesses about that or any worry about that, reach out to us. We'll guide you through it. That's what we do. So get the app. go to your app store, look for the QJO investment tool, the quit jerking off investment tool. Go to my website, aaron.chapman.com, go to the media section. You can look at the videos I did on calculating whether it be your assets for reserves or calculating the amortization. That will also show how to calculate how inflation impacts that. Go to also aaron.chapman.com, scroll down, go to the donate button, look at what people are doing there, participate in that. There's no reason why any of us would want to be able to make a dent in that part of the world. Appreciate you guys. We will talk to you on Tuesday as we get deeper into the month.